Hey guys, it is Julie here with JT.Wealth. Today is part 2 of our weekly dividend investment challenge. So if you're following along or if you're just looking for some great dividend stocks, this video has something for you. Okay, so welcome back guys. Like I said, this is part 2 of our weekly dividend investing challenge, where we are going to be investing $50 every week into an M1 Finance account. Now, if you don't have M1 Finance and you want to sign up, we do have a link down below, and if you use that link, you get $10 for free. We are doing this challenge along with our YouTube pals, Sam from MyFinancialFriend and Logan from Logan Fisher, so make sure to check them out. Sam is going to be investing $100 a week and Logan is doing $25 per week, so there is a good range of price points for everyone to follow. These guys have a lot of other great content too, so make sure you head over to their pages after this video. We'll have links down below in our description to get there. As always, welcome back to all of our subscribers and hello to everyone new. We just passed the 1,600 subscriber mark, so we're so excited. Thank you very much for the support. We have that 2,000 sub milestone in sight now, so I'm getting really excited for that. We also did just set up a Patreon page, and I just got my first patron. Hi, Jim. So make sure you check out the link for that down below too. Okay, so on to today's topic. So we're going to cover 2 different dividend stocks that we put money into this week. And over the next few weeks, we really want to go over some of the metrics and ratios that are most often used when selecting a good stock and really just break them down and help you understand how these metrics are used. So this week, we're going to cover dividend yield. Side note, as for next week, I will be tweaking my video a little bit where I'll be filming it Thursday and making sure that I get it out for you guys by Friday morning. Just this way, if you are wanting to purchase any stocks, you can do so that day and not have to wait until market open on Monday. So like I said, we are investing these funds into an M1 Finance account. I am a little bit new to using this platform, but it's basically based on a pie, and then you select the overall breakdown within that account. I am still adjusting to this and getting used to it, so just bear with me as I fine tune our percentages and amounts over these next few weeks. But you can see here we now have 5 different stocks in our pie, and those are split up at 20% each. So we had $20 going into those 2 new stocks this week, and then a few dollars kind of balancing out those other 3. Our 2 new stocks this week were AT&T and Pfizer. So let's take a closer look at each of those. First up is AT&T, so their stock ticker is T. These guys are obviously a US-wide telecommunications company. You can see here that they are heavily invested in that 5G space moving forward. Their stock closed today at $29.58. These guys pay a quarterly dividend, and that yield is currently at 7.04%, equaling 52 cents per share, and the next one coming up is August 3rd. So these guys are a dividend aristocrat, as they have been paying dividends for well over 25 years. Okay, looking at price targets for the T stock, you can see here we have 11 analysts offering 12-month price targets for AT&T. Their average is coming in around that $35 mark, with a high-end range of 38 and a low at 31. So it's always nice to see the low being higher than the price it's at now. We like looking at this too because we're not just looking for that consistent dividend, but companies that are going to maybe show some growth in the stock price as well. Which brings us to our second stock, Pfizer. I'm sure you've heard their name a lot in the news lately. This is a very well-known pharma company, and they're in that race towards a coronavirus vaccine. So their stock ended today at $38.48. These guys' dividend yield is 3.87%, and they also pay quarterly. Their next dividend is 38 cents per share, coming out on September 1st. So they have been paying a dividend since 1980, but they did lose their aristocrat status around 2009, right after the financial crisis, as they did have to cut their dividend then. But they have been back on track consistently ever since. And looking at their stock price analysis here, we have 15 analysts offering 12-month price targets, average coming in at that $41.88, high end of 55 and a low of 35. Now, of course, if Pfizer is successful in getting this vaccine out, I think we could potentially see a lot of great growth in this company, and that high end would definitely be reachable. So those are our 2 stock picks this week. Now let's get into dividend yield. So dividend yield is quite simply the annual dividend per share over the price per share, which gives you your dividend yield. So this will let you know what you're going to be receiving compared to your investment in that company stock. To keep it simple, if you're comparing two companies that both cost $100 per share, and one is paying $3 per year in dividends, and the other is paying $6, then you're comparing a 3% to 6% dividend yield. You can clearly see which one is going to give you a better return on your investment. Keep in mind though, this does not take into consideration any actual stock price growth as well. So what is a good range for your dividend yield to be in? So take a look here. It'll tell you a good dividend yield is going to vary with interest rates and general market conditions. Obviously, the last few months we have seen a lot of volatility, so this can kind of skew some of those numbers. But a typical yield between 4 to 6% is considered quite good. So a lower one obviously might not justify your investment, whereas a higher one might be considered too risky. That isn't going to be stable down the road. One last thing that I want to touch on is making sure that your investment account is set up with DRIP, and that is a dividend reinvestment plan. This will really make sure that you benefit from compound interest. If you take a look at this graph here, if you started off with $10,000 way back in 1960 and invested in the S&P 500, that bottom line is if you did not reinvest your dividends, you'd end up with $460,000 there. With reinvesting dividends, that is a whopping $2.5 million. That is a huge difference, guys. So this compound interest is really key. Now, if you haven't watched our first episode in this series of dividend investing from last week, please make sure you do. We really highlight hitting that goal of $2,000 per month in passive dividend income. And we're gonna hit that goal by just investing this $50 every week into strong dividend paying stocks. Now, I know it doesn't seem like a lot, but we're only on week 2, guys, so stick with it. And that is all for today, guys. So please leave a comment. Let us know what you're invested in. Are you following along? What are some dividend funds that you really like? Please make sure that you are subscribed and give us a like down below. And have an awesome weekend. Thanks.